break down with you a little more of the psychology of a trader, and how important it is to just have some important characteristics to be a trader. What I like to do is develop a focus list of stocks that I continue to go and scan through each week. And unless you get overall overwhelmed and carried away in the markets and are always going to different angles, you want to be able to be focused in on a set of stocks. That way you can start to learn these stocks, see how they move, start to track them. You want those stocks to have characteristics of quality. You don't want to be stocks that have some volume, liquidity that you could trade off of. Stocks that are known stocks, not fly-by-night stocks. You want to be able to sleep at night. And you could characterize these as anything. You could take the Russell 2000. You could take the S&P 500. You could take the Dow 30. You could take any of those stocks and those indexes and apply them to your thing. As long as you have a focus list and you continue to go back at this focus list, you don't want to be just flying by the seat of your pants every day. So what I like to do is establish that list of stocks and go by and scan them each week and wait for certain setups. And these certain setups have been tested and proven in my trading strategy over years of trading. So I continue to fall back on these, and these are what I'm going to share with you tonight. One of the best setups that I can always recommend is a divergence between the stochastics and the price level. All these fall into a category which I call the 5 indicator setup. But some of them are even better than some of the other setups. In that 5 indicator setup, you can have a combination of a lot of different indicators setting up. But what I like to see here is a move in the stochastics, basically diverging with the price level. So what I want the price to be, and this takes a little experience to notice, but you could use some of the indicators like the 20, 50, 200 EMAs to help you along in trend lines and overall stock patterns, which fall into these indicators. And what I want to see is the oversold stochastic coming back down as the price level holds its level and really doesn't pull back onto that. So you're having that divergence between the price action and the stochastics pulling back into an oversold level. In this case, we're holding the 20-period moving average, which is a great indicator. So just think of it that way. You could actually think of it holding the 20, holding the 50, or holding the 200, and that's giving you 3 setups. Now, there's no reason to get in before those 3 setups if you think of it that way. If you think of it saying, all right, this is going to be a disciplined trade for me. I'm going to wait for these setups to happen, because I can guarantee you, unless something happens in the market that changes the overall content of the market or the bias of the market, these pattern setups and these divergences are more successful than the random areas you would get into the market. So I would say, if I see this, I would say 4 to 6 times this trade is going to work out in my favor, which is good odds. And that's what you want to do as a successful trader, is have the best odds and the best setups possible. I call it the best risk-reward ratio going into a trade. So in this VRX here, Valiant Pharmaceutical is a good example of this. Stochastics pulling back down into that 20 area, but the price level is holding off here very good. And this was a trade that we took on the show, and again, a very nice trade. Now, this one came right after another good divergence setup here, and this was ArcSight. This is before they came out with the news of potential takeover. And this is the let's see if we can actually find this. This is back here when I was looking at when we were trading this stock. Stochastics pulled back here, and you can see the price level here just going sideways, and again holding the 20-period moving average and holding the trend line. So right at this point, you could definitely see the pullback in the stochastics right here. And once you start to see that pullback in the stochastics, but yet the price level is holding sideways action. And yeah, again, when we talk about that, we look at we look at the depth of the pullback in the stochastics versus the depth in the pullback in the price here. I'm sorry for my lines problems there. This is classic rockstar style video at night, bringing you the best information, but not technically set up here properly. Anyway, another great, and this was a great trade also. And again, eventually that one got. And now actually tonight, talking about this one, this should actually pop tomorrow on the rumors of a takeover by Hewlett Packard, which is setting up really nice. So ARST is another good setup, and this is, this is a class. This is one of my favorite setups. So when I see this setup, this is called a stochastic price divergence, I take this trade. I love this trade. I take it. I think you can be a successful trader off of this trade. All right. Then another setup that I love on this this thing is, let's see what we got here. Let's take a look at. I had all my trades here. Oh, here we go. APSG here. This is called this is a retest of a trend line break, all right, or a channel break. So whenever we have an established channel or a established pattern, and we have a break, and we have that retest of that trend line matching up with an oversold stochastics, that's also another trigger for me. So another highly probable or high probability trade here is when you have that retest of a lower trend line that's been established 3 or 4 times, and the stochastics pull back into a point where everything lines up aggressively. And actually, even here, you can actually go back here and put 2 trend lines together and see there's lower trend lines. So this is actually 1, 2, 3, 4 indicator setup. Great setup here on APSG. This is past a trade, but I want to give you an example of what you should be looking at. All right, and again, stochastics pulling back, price level pulling back. We're holding off recent lows, which is a divergence in itself. And I go over this every single day when we see these setups. A downward channel, lower lows, lower stochastics. Eventually we get a divergence here where we get a higher low, a higher low, and a lower low on the stochastics, and that's the divergence, and the trend has changed, and that's where you should be concentrating and getting in. That's your highest probability setup right there. So again, all you have to do is wait for these to set up. You don't have to chase them. Let them come to you. All right? You let them come to you, and then you take the trades. You scale in here. You get a follow through. You get a confirmation of a crossover in the trend on the stochastics. You add your position. And you're good as gold. So if you have a good focus list, which we go over, and you can rotate through that focus list and just take the trades that come to you. I don't care if it's Coca-Cola or Wells Fargo or something that's quality. These setups are high probability and very good risk-reward trades. And again, if you're going to do something like this for a living, that's what you want to do. That's what you want to get into. So that's a trend line retest. Pullbacks and multiple indicator setups. Again, we'll go over this one. We went over this a couple times. It's just such a great setup. The easy chip. Again, a similar situation. We have a nice pattern setup, a nice pullback in the stochastics, a nice upward trend line, a nice support level. 5 indicator setup here showing us a great entry. And again, that one just took off to the upside. And again, just another good. So those 3 right there, we got the divergence between the price and the stochastics alone. We have a trend line retest, and we have the 5 indicator or on a multiple indicator setup. Those 3 trade setups are probably the most successful trade setups you could get into. And if you have the patience, which is a characteristic of a successful trader, and the discipline to wait for these setups, you would be successful at this. What happens is, unless you're prepared in the markets and you wait for your setups, you can really get chopped up. It's tough being in front of your computer all day and just saying, hey, I want to sit here and wait for something to set up. Because this type of setup will happen on the daily chart, which we see here. It'll happen on the 60-minute chart. It'll happen on the 15-minute chart. It'll happen on the 5-minute chart. It'll happen on the 1-minute chart. Depends on where you want to look for it. So intraday, you could trade this. You could scalp these positions. No problem. Swing trade, you could swing trade these positions. No problem. All right, so there's another good setup on that one. So we went over that, multiple indicators, divergences. Again, patterns. If we're going to talk about some patterns right now, we're talking about the wedge pattern. Great pattern. You have a great setup, and the divergence into a wedge pattern, falling wedge patterns. What I look for is getting the wedge pattern into a 75% pull area of that wedge. Look for that pullback in the stochastics, and we hold off of recent lows or a double bottom, which is usually going to happen. That means we're holding off the recent trend line. It doesn't even really matter if we even violate the low there, but the object is that we're holding off the trend line before we get oversold here. So we're not really making new lows, and that's the divergence. And again, the Johnson & Johnson was called last week, and that was a great trend, breakout. Now there's a couple on the 10 for 1,000 watch list this week, which are set up just like that. So they should perform just as well. WFT is one of them right now. This is a channel trade, which is an established channel. it's a little bit different, but we held a divergence here. We actually had to pull back in the stochastics, holding way off the channel and pushing right through now through the thing. So we're going to look for some more upside on WFT there. So I just wanted to get this across because it's so important as a trader to develop that discipline and have the market come to you and not chase the market. Every day on my show I see so many new traders trading the markets and getting overwhelmed sometimes because they might get into something and not understand that the market's going to flush around. You can have an up day, down day, but unless the patterns are holding, you have a big range here. So there's a lot of emotions when you deal with money, and you have to conquer that emotions. And not to sound too mystic or any kind of crazy, but you gotta become a Jedi in the market. You have to have that. You have to have that control. You have to have that mental control. Understand. You have to believe in your patterns. You have to have the patience and discipline, and everything else has to come into one, tight thing. And that's why trading is so good. That's why I love being a trader, because you could conquer those emotions, develop that discipline, develop the patience here, and really have everything pay off for you. And it's just a matter of timing. Fastenal, F-A-S-T. It's something new. I just noticed again, this was another great example of a multiple indicator setup. I didn't see this one. I would have actually took this trade. Again, there's so many stocks out there, but this falls right into that category of, again, whenever you look for multiple indicator setups, you look for the stochastic selling, price level coming down to a certain level. This is X marks the spot right there. Trend line, lower trend line, 200 period moving average, oversold stochastics, bounce area, perfect. Overbought stochastics, downward trend line, sell off. Again, it bounced off to 200. No big deal here. But this lower trend line stochastic bounce here, lower trend line, really gave us that nice momentum. And the pattern breakout here, we've touched it 3 times. 4 times you start looking for that trend line, that channel break, especially above the 2,250 period moving average. We started consolidating and breaking up here. So just another good example of, and again, not to say you should be chasing this now, but this is where you should be getting in, right down here on these multiple indicator setups. So that's it. I just want to get that out for you. Hopefully that helps and maybe instills a little discipline, a little patience into your trading philosophy. Everyone has a different philosophy, but don't overcomplicate things. That's the most important thing. The market is going to do what it's going to do, but you could set up the market the way you want it just by waiting for the setups to come to you. How many times have we seen a lower trend line hold? If you have 2 points and the third point is, your risk reward is so much better there. Why reinvent the wheel? I feel so passionate about this. I have to get on the mic sometimes and just start yelling and doing these videos and stuff because, it's there, people. It's there. It's there. You just need to pay attention to it. You need to have the discipline. All right. Again, that's it. So this is DayTraderRockStar for DayTradingRadio.com. I go over these setups every day live on the radio. Started at 8:30 in the morning Eastern Standard Time, going all the way to 4 live every single day. So the setups are there. I bring them to you. I also send out a nice little video watch list of the setups every Sunday for members, which is very reasonable, $24 a month, $24.95 a month. But that's my little plug there. But you don't even have to, you do what's right. You want to be successful, you find the right stocks, you get the right discipline, you do the right thing. Case closed. Talk to you guys tomorrow on the markets.